Hey, this is Tom with CoinMD, and in this video, I want to talk to you about two things as it pertains to cryptocurrency. First is price, and then the second is value, and then really there's a third element which I call the X factor, which we're going to get into a little bit as well. So this will be a really good education when you're not only just analyzing cryptocurrency for investment purposes. These are really good tips and insights to help you understand maybe which cryptocurrencies are going to do better than others. So pay attention. Let's get into price first, okay? And price, I'm going to throw a couple slides up for you so you can see some of the words and some of the ideas and some of the images that I'm talking about. But price is really about supply and demand. It's very simple. You know, I like to equate Bitcoin to the 1965 Mustang. The 1965 Mustang, they made 644,500 of them. Each one had a VIN number, okay? Well, Bitcoin, they made 21 million of them. Each one of them has a serial number. So a lot like the 65 Mustang, there's a finite number of Bitcoins, and there's a finite number of Mustangs. Well, we know over time, some of those serial numbers for the Mustangs have gone to junkyards. You know, they've been lost. They're sitting in sheds and garages around the world that are, you know, hidden forever, you know, burned down in houses, things like that. And so the supply of Mustangs is actually reduced, 1965 Mustangs, because they haven't made any more since 1965. And the reality is this: the Mustang came out at $2,320. Well, today a 1965 Mustang in mint showroom condition is $250,000 to $500,000. We saw one sold for $500,000. And so when you look at when you look at Bitcoin, CoinMD, the same thing. We have a finite number of coins as well, but the number of coins of Bitcoin have disappeared over the years. Some say that 4 million coins will never see the light of day. They'll never be used. You know, so that means maybe there's only 17 million of them instead of 21 million. And so when we talk about supply and demand, of course, on the demand side, there's a lot more people today that want the 1965 Mustang, Ford Mustang, than did in 1965. Today, more people want Bitcoin than wanted it in 2009, right? So it came out at 0.0008 and it went up in price all the way up to 19,000 is the highest that we've seen it, and it's hovering around 7,000 right now. Well, you know, when Japan came online and announced that 240,000 businesses were going to be accepting Bitcoin, when Australia announced that it was legalized as a currency there, you know, when, you know, you look at all the different, when the EU, the European Union, announced and recognized it as a currency, and I don't think the United States isn't far behind. I mean, labeling it a commodity gives it disastrous tax consequences that I think eventually the U.S. will say, hey, we don't have to deal with all this. Let's just make it a currency like everybody else. Let's hope that happens, okay? So supply and demand really is driven by one thing, and that's buzz and awareness, as I like to call it, these PR campaigns. And I got to tell you that the ICO market, the initial coin offering market, smelled a lot like the IPO market of the 1990s. And for those that were there, you know what I'm talking about. If you had a good domain name, a good looking business plan, and somebody who could build a website, you could raise millions of dollars. You know, I'm going to fix this problem. I'm going to deliver pet food by the mail. You know, you come up with some crazy idea. But we looked at the companies that actually made it long-term, like Amazon and eBay. They had value components, and that's what I want to go over, because there's a lot of coins out there right now that have no value components whatsoever. And those are the coins that are going to go away. If you don't have an underlying revenue, I mean, I remember in my internet days, I was telling my investors, yeah, I've got a revenue model. They're like, oh no, don't charge, just make it free. And I'm like, well, how am I going to pay my bills? Oh, we'll just raise money. I'm like, okay, I don't think that's going to work long term. But, you know, that was the mentality. And we see that going on in the ICO market. It's going to be a lot shorter lived than it was in the IPO market of the 90s. But the idea nowadays is, oh, hey, if I can come up with a great idea, a use case, and a white paper, and I'm really good at promoting on social media and creating a lot of buzz for this, I'll spend 40% of the money I raise on creating more buzz. And eventually when the buzz runs out, my money does, my idea goes away. We're seeing 90% of the ICOs that have launched last year are out of business. They're gone. Furthermore, they took all money in cryptocurrency, and cryptocurrency had an 80% pullback. So the 60 million they raised is now worth 12 million. So their budgets didn't go as far as they thought they would for their development of their projects. So that was a big deal. But anyway, price is, price to me, that model, there's some aspects there that are true, but focusing on price is so yesterday. Okay, that's like focusing on the IPO market. We're just going to get rich and nobody's going to pay for it. That never worked. After 2000, after the market crash, everybody started charging for the internet. Okay, now let's move into value. Value is, to me, where we start talking about, I always people say, well, what's the underlying value of cryptocurrency? I say the blockchain, the computing environment, the redundancy, the reach, the ability to have an unhackable network, the ability to send money instantly for fractions of a penny. That is all value. I don't care how you look at it, but you say, well, what's the underlying value? That's the value. And they say, well, yeah, but the dollar's backed by gold. And I go, no, it's not. That went away with Nixon, okay? So the only thing that backs the dollar right now, the U.S. has $5 trillion in assets approximately. We have $2 trillion in tax revenue that comes in every year. We have $21 trillion in debt. So we don't even really have enough revenue to pay our bills and pay the interest on our debt. So what backs the dollar? Well, the U.S. military does. The U.S. military will defend any country that uses the U.S. dollar as its main currency because that's our marketplace, that's our commerce. And so when you think about the blockchain's like the U.S. Army. It's this unhackable, invincible network around the world that stores my data on 10,000 nodes around the world. That way, if 2,000 nodes go out of business, the other 8,000 have my data. I'm good. So redundancy, backup, security, the ability that it can't be hacked, the ability for it to transfer instantly, all of that's value. And I don't know why people don't think it isn't, because it really is. When you look at the dollar, the value of the dollar ties into a lot of the things that I'm about to tell you here, even though the value has no underlying value. The dollar is from a number standpoint, the U.S. dollar is bankrupt. Okay, so when you look at that, and we are a debtor society, we actually issue debt. We are a bankrupt society. But when you think about value, the next thing is usability. Well, I mean, the dollar's usable, right? All around the world. People take it all around the world. That creates value. When it's usable, it's got value. And that's one of the things that we focused on with CoinMD is we wanted to have a healthcare marketplace where people could spend their coins. That's value. When you can go out there and take the coins that you've earned, whether you did it by buying them or whether you did it through healthcare related activities, and you can go spend them on yourself to improve something in your life, that's value, right? So usability is important. So the network is number one. That creates value. There's lots of aspect to what we call the trust protocol. The network provides lots of value to us. Okay, the blockchain, which runs on top, that creates the network, is the blockchain. Okay, the technology. Usability is very important. The ability to spend it and makes it a utility coin like CoinMD is. I can show anybody that over 6% of all the transactions done on our platform are used for buying and selling products and services. That's a usable coin, okay? Now, as far as convertibility is important. What if I want to convert it into, say, Bitcoin, or I want to convert CoinMD into Procter & Gamble coin. Let's say they got a coupon coin that I want to convert it into. Or maybe Ferrari's got a coin and I want to convert it into Ferrari coin so I can buy a Ferrari. So all of these corporations around the world will eventually issue their own coins, and the convertibility of your coin, that's why we think the Ethereum network is going to be so massive, because there's going to be every corporation probably will have some type of ERC20 token where you can trade it for another token. Another word for that is the kind of interoperability, where you can move in and out of that environment, without missing a beat. It's completely exchangeable. Every handshake around is firm and welcomed. And I like that about Ethereum. So convertibility and this kind of interoperability where it can work in any environment. I can convert my ERC20 token for a Procter & Gamble token, or a AMC movie theater token, or a Chick-fil-A token. All of those things are going to become a reality. And if you don't think that the banking industry is in for a ride, what's happening in this space is no different than, and I compare Vitalik Buterin with Ethereum to the people who put Google together, and how significant it is. But I think Vitalik is even smarter than them when you look at it. Liquidity is the last thing. You know, is it liquid? Can you sell it? That's I always have people say, you ain't got all that Bitcoin, can you sell it? I go, yeah, in fact, I got a black card right here that I can actually sell some Bitcoin, and I can put it, make sure I don't show my card number, but I can put it right on there. And so, when you look at that, I got two black cards, that's a different one. I'll find the other one. But the important thing is, yes, it is liquid. It is something I can use anytime I want to. And the difference between my money that's in Bitcoin is historically, it's gone up in value. Now, let me ask you a question. If money has historically come up in value, is that value in itself? And the answer is, heck yeah, it is. Okay? When you have the ability to have a currency that outpaces inflation, that alone is like having a financial advisor that places money in investments that outpaces inflation. Is a financial advisor for you? Does that give you value? Well, man, I don't really need one. I just kind of diversify into 20 or 30 cryptocurrencies and let them just ride, and they've historically been going up in value. 80% will go out of business, but the 20% that stay in business are going to make me very wealthy. So when I look at that opportunity, and that's why I tell people, when you're looking at value, analyze the coins that have usability, have convertibility, have liquidity. They're solving a problem, and that gets me to the X factor. And the X factor it's really three things. The X factor, like for CoinMD, is, are you solving a massive problem? Yeah, the cost of healthcare is increasing faster than our money our money's losing value by single digits. In most countries, first world countries, double digits in a lot of other countries, triple digits in some countries, while healthcare costs are going up by double digits. So you got your money losing value, got the cost of living health lifestyle going up. That's not good. Okay, that means you're going to probably start living an unhealthier life, and it'll lead you into potentially a retirement and an early death. Maybe that's the plan. I don't know, okay? But the X factors, when you have a $5 to $6 trillion industry that's severely broken, not just in the United States. I mean, the healthcare industry in the United States, if you break it away from the U.S. economy, it's the 5th largest economy in the world. But what about the problems of malnutrition throughout Africa and Asia? And I see it everywhere. India, everywhere. Okay. What about malnutrition in Europe? There's malnutrition in Europe, all over Europe. But when you're solving a problem, and you say, well, what problem you're solving? I'm allowing people to earn coins that have the ability to go up in value, where they can use those coins to improve their life. That's value, isn't it? That's huge value. That's X factor value right there. Okay. The second thing for X factor value is the idea of market timing. We're in the 1% club. Less than 1% of the people of the world are using cryptocurrency right now. When the other 99% get in, it's going to be like a tsunami of money coming into this space, and they're all going to want the coins that we're holding. The X factor, to me, one of the biggest ones, is we're at the right place at the right time. We are in before the tipping point. They say once it hits 13.5% of the world using cryptocurrency, the other 60% will jump on, within the next couple years after that. So we're so early stage right now that our biggest battle that we have is with ignorance. We're out there fighting ignorance all day long of people saying that cryptocurrency is a scam, when in fact all the billionaires are saying, no, it's not. I'm listening to the billionaires. I don't know about you, but I follow smart money, not dumb money. Okay? And the guys at my bowling league, dumb money. Okay, I wouldn't follow them for the world. Some of the people, that I know that go to different sporting events, they tell me cryptocurrency is a scam. I go, yeah, right. Okay, it's not. And the one guy that I talked to that really got it is a big guy in the real estate business. He goes, cryptocurrency is no different than real estate. It's finite, right? And I said, yeah. Now, there are some people that get it, but you just have to crack the code. You know what I mean? So, when we look at the last X factor, about cryptocurrency, I think companies that use unconventional means, like to me, Amazon used an unconventional means of delivery to get products and services to people. I mean, nobody would have ever thought books would have been delivered by the mail. Zappos used it to deliver shoes. And when you look at companies that use unconventional methodologies to deliver data or deliver physical goods or whatever, you've got to kind of compare them against what the conventional means is. Conventional means with Amazon, with the competitors of Amazon, they used bookstores. Netflix did digital delivery and mailed the CD-ROMs to you, whereas Blockbuster had these big expensive stores. So when you think of conventional versus unconventional marketing, the one thing I know that we're doing with CoinMD is we're using network marketing. Well, a lot of people would say that's unconventional. Well, I got news for you. The millennials love network marketing. They love the idea of being their own boss. They're enthusiastic. They want to build huge networks. They're connected in social media. They build fast networks. And that's one of the biggest growth areas of our company, CoinMD, is people that are under 30 years old. They get it. They understand cryptocurrency, they understand social media, and they understand network marketing. And when you take that X factor and compare it against, say, what Bitcoin, the way Bitcoin's doing it, or Ethereum, or any of the other conventional cryptocurrency models, I would say the reason we're growing at 4,000 to 5,000 people a day, and what will make us one of the fastest growing cryptocurrencies in the world within the next 6 months, is we have an unconventional X factor way of doing business. So the X factors are, we're solving a massive problem in the healthcare industry, health industry in general. We've got the X factor of network marketing, an unconventional form of marketing. And then we've got the X factor of market timing. We are on the front edge of blockchain technology and cryptocurrency. And as I tell everybody, comparing it to the internet, we're talking about, if we're doing kind of a comparison, we're talking about email and maybe web browsers right now. Okay, we're not talking about search engines. We're not talking about websites. We're not talking about e-commerce. We're not talking about gaming, social media. That's so far. That's like 5 years from now. So we're so far ahead of that game. So when you start thinking about price versus value, look at what CoinMD's got. We've got the liquidity, we've got the convertibility, we've got the usability. We've got so much more and we're solving these X factors. We've got X factors. We're at the right place at the right time. We're solving the healthcare problem, the health problem around the world. We're giving people the ability to earn cryptocurrency that historically has gone up in value, and we're allowing them to use it to pay for things that'll help them live a healthier, wealthier, and happier life. And that to me is that's why you should be so excited about what we're doing right now and accumulating as many coins as you can, because right now our price is really low. In fact, we have more value than most cryptocurrencies, and our market capitalization is lower than all of theirs because they don't see us coming yet. And I'm fine with that. We're coming on stealth. They're not going to see us coming. Next thing you know, they're going to look up and we're going to have 5 to 10 million users in 80 different countries that are transacting our coin, trading our coin, using it on their mobile apps, using it with a credit card. There's so many things that we have in the works right now that will make CoinMD the #1 health cryptocurrency in the world. I'm glad you stuck with this video. I hope you watched it all the way to the end, because as usual, you know what? I want you to live healthy and be wealthy. Thanks for taking the time to watch this training.